Welcome to TheoTrade. This is Don Kaufman. It's May 3rd, 2019, and you are watching the TheoTrade Weekend Update. Allow us to begin this weekend's update with a discussion, of course, what I term the fear of the Fed. You know, the fear of the Fed lasted effectively, what? Maybe 6, maybe 7 hours of actual trading time, including Wednesday, briefly into Thursday. And then here we are once again rallying back. The Nasdaq effectively is at all-time highs. I'll come to that here momentarily. But again, I'm kind of dubbing this the fear of the Fed lasts one trading session. That's it. That's all we can effectively do. With that kind of fear of the Fed and the markets closing again up, the SPX on the entire week really only closed up 5 points. So last week we effectively on Friday we closed at 29.40. This week we closed at 29.45. So what did we end up doing week over week specific to the SPX? Absolutely nothing. I mean, for the most part, we were massively unchanged. The Nasdaq, however, did actually crest into, well, really respectively all-time highs and the all-time closing highs. So again, the fear of the Fed lasts one day, and that actually leads me over to the bond markets. The bond market's ambiguous at best. I mean, the bond market is really confused by this, and I'm actually going to show you in just a minute on the probabilities of really looking out to future and possible rate cuts. The marketplace right now, it's confused, and it's not necessarily, the marketplace is not necessarily buying into what the Fed's selling right now. What's the Fed selling? Transient. Okay, that maybe inflation could kick in, and maybe, just maybe, the Fed could even be raising rates. Well, guess what? The marketplace says something exactly the opposite. There's still a much more significant chance of a rate cut coming into, and I'm going to show you this again, in late December of 2019, and again January of 2020, they're showing that rate cut chance over a 50% probability of a rate cut. So even though we heard out of Jerome Powell, again, the marketplace, we let this thing kind of settle in. We didn't look at this and talk about it on Wednesday because I really wanted to let the marketplace and the probabilities work themselves out. Anyway, in effect, the marketplace is saying something vastly different, which is precisely why we probably rallied back to the upside. They're saying, we ain't buying what you're trying to sell us, Jerome Powell. Next thing over here, as I was saying, the Nasdaq, again, essentially all-time highs. And part of that largely today was due to Amazon. For those of you that kind of missed this, there was an interview that went on with Warren Buffett. Warren Buffett said that really somebody at Berkshire Hathaway went out and purchased Amazon. Wasn't Warren Buffett. Nevertheless, Amazon explodes higher and takes the Nasdaq along with it. Meanwhile, Google earnings came out this week, and Google earnings were less than stellar, but the entire marketplace, again, shrugs it off, looks at it as being an anomaly because everything else is wonderful. Which brings me to my next point over here, what I have to talk about briefly. IPO fever is in play right now. First of all, Uber. Okay, for those of you unaware, Uber is going to be public as of next week. The IPO is coming out. The thing I wanted to talk about with Uber, and really why I'm calling this IPO fever, is Uber did their roadshow, and they barely, by the way, for those of you who don't know what a roadshow is, they actually cruise around from investment firm to investment firm. They got all the investment bankers standing behind them. It's a party, and what they try to do is, sell their wares. They pitch them, and if the investors like it, they're going to buy this stock, the IPO, yada, yada, yada. Listen, Uber barely stepped off their first Learjet, and they were already oversubscribed by 10%. Okay, this is a company, by the way, that's losing billions of dollars a year. I'll put that as a side note over here. But it's not just Uber. If you looked at Zoom Communications, all right, if you've never seen that Zoom video, that thing's up 30% from when it actually traded. It's up substantially more than that from the initial IPO price. We have Lyft. Lyft is actually off by about 20%, but still hanging in there. Lyft actually has earnings coming up too. That should be interesting. An unseasoned management crew giving earnings for the first time. It's quite exciting. You should listen to that conference call. And then, my personal favorite over here, Beyond Meat. Apparently, in the IPO world, we have now gone Beyond Meat, and that has rallied. That's actually the best IPO thus far. Okay, this is veggie meat. Beyond Meat has rallied and stunned IPO markets in 2019. Why am I getting to all this? Well, I'm going to show you that here in just a moment as we're going to take a look at some charts and a couple of different trade ideas. But again, we have Nasdaq fever, we've got IPO fever, all right? The financials exploded higher. That's actually what held the S&Ps up throughout the course of the week. Again, all of this and much more. We're even going to do a little discussion, of course, in terms of expected move, leaving a glance possibly at Apple. For those of you that missed it earlier this week, we hit the Apple butterfly square on. Couldn't hit that earnings butterfly any better than we did. With that, let's get to it. Let's get to some charts. Let's get to some trades. We'll get down to it. To the charts and trades we go. Allow me to begin this session here looking at the CME Group's page. This is actually what we term the Fed Watch tool. If you're not familiar with it, I was detailing it a bit earlier in the week. I'll take you into a little bit of depth right now. This is actually we term meeting probabilities. And I want to explain it in a little bit of depth over here because I think this is critical, absolutely critical importance moving forward. Because as I said a moment ago, hey, the fear of the Fed really only lasted one day. Kind of what gives? Well, right down the middle over here, as I've got it highlighted, this is where currently the Fed fund futures are set. When people talk about rates going up or rates going down, well, the rates right now are 225 to 250. That's 2.25% to 2.5%. All right, that's actually the target for the Fed fund futures. Now, over here on the left-hand side of the screen, we have the different meeting dates. The next Fed meeting, you have to wait. Ooh, how exciting. We're on pins and needles to June 19th, right? To June 19th. And what this really says is that point in time is about a 95% chance they leave Fed fund futures unchanged. Then that probability really starts to diminish the further you go out in time. And as I was saying just a moment ago, when you look out towards, the December meeting, and here's our December meeting, it's December 11th, 2019, there's only about a 53% probability, of staying at this particular rate. Well, what are some of the other options? Again, almost a 50-50 shot over here. Well, they could take it down about a quarter point. They could take it even down about a half a point. But they're giving right now about a 36% probability. And I say they. This is the marketplace. This isn't a bunch of monkeys standing around like voting. This is billions and billions of dollars that are trading. And those trades, are then turned into probability, right? So this is just a probability kind of distribution curve. And again, there's almost a 50-50 shot of a rate cut. The point being is, even though Jerome Powell said the evil word transient inflation, do you see any shot whatsoever here of a rate increase? Absolutely unequivocally no. All right, nobody is giving it even the slightest hint, not even a 0.1%. They're giving no chance to a rate increase over here. In fact, when it comes to early, again, this is the January meeting of 2020, they're giving it a less than 50% probability. They're saying, yeah, they're going to cut rates, which is quite shocking. So again, the Fed instills fear, and again, just a few hours later, it's over. It's all over. It's all over but the crying. And I think the SPX really reflects just that. So again, here's really the week at large. And I'm actually going to box this out a little bit, the week at large. This, the box that I just created was a $37 move. Now, this is where the week started. Right here is where the week ended. And what did we effectively see? Absolutely nothing. The SPX was massively unchanged. But again, the week at large gave us about $37 of movement. We tagged literally, almost to the penny, the edge of the expected move. And that's where we reversed on. So when I was saying, we felt the fear. Well, we felt the fear for what? Maybe 2 hours on, Wednesday. We felt the fear a little bit into Thursday. It's all over come Friday. But still my heart, Buffett talked about Amazon, and we have Uber IPO, and everything's, coming up roses again. But as I showed you, that's not, again, just, the marketplace kind of rebounding over here, right? Again, the Fed in the traders that are moving capital around those bonds, they're not believing at all that the Fed even has an inkling of raising those rates. So what do? They go right back to their Goldilocks scenario. And it's one of the biggest takeaways, that you can have on this entire week. The market doesn't believe, what the Fed is trying to sell. And the Fed's trying to actually do what? They're trying to, maybe warn you a little bit. Don't necessarily, put all your eggs in the long basket over here. Meanwhile, nobody seems to believe it. So net, where are we on the week? Up a whopping 5 points moving into the next week. Now, the SPX finished largely unchanged. Okay, well, what finished a little bit better? So if you take a look at the Nasdaq, of course, the Nasdaq, everybody's like, it's on fire. I'm actually going to put on the auto expected moves just so you can see this really quick. When you start looking at the Nasdaq, and I'm looking here at the QQQ, and the reason I use this auto expected move because it actually delineates precisely, and it's right where my mouse is right now. That's where the week started. That's where the week ended. Okay, did we end up? Yeah, minimally so. Okay, I mean, it was, for the most part unchanged. You can see the expected move is about the exact same in the NASDAQ for the next week. So what really rallied this week? Right here, financials. Okay, financials exploded to the upside. In fact, the financials, this is interesting. They closed on the edge of the expected move. A little blue dot over there. They literally closed on the edge of the expected move. It's one of the things that I talk about so extensively. Like if you don't understand expected move and you're watching this video over here, you got to get in the know. You got to search through some of the videos here at TheoTrade. Okay, you have to know what expected move is to really comprehend a lot of the different trades, okay, that we are doing, and moreover, how and why markets are effectively moving. Now, these expected moves, all right, listen, they're out to the future. This is not, the magical, 618, that I'm pulling out of thin air like a Fibonacci. Clearly, I'm not into the Fibonacci's, right? What this effectively is, it's how the option market is depicting risk moving into the future. And the market, okay, on a day-to-day and a week-to-week basis, it really does adhere, okay, heavily to the expected move. You don't believe that? Just look at the SPX. Okay, last week we tagged the upside of the SPX to almost the penny. This week we actually tagged the downside of the expected move almost to the penny. I mean, that's almost worth looking on an intraday basis. Now, the coming week, again, what do we have for an expected move? That's when you go to the option chain, you open up. Okay, what's 7 days from now really looking like? Here we go. Cruise out to like May 10th. We're sitting just shy of a $34 expected move. Remember, last week we had a $37 expected move. Now we have a $34 expected move. What does that tell me? Not much. It's just not a whole lot of risk out there. However, okay, that being said, one thing I do want to remind you guys of, I'm actually going to open up a longer term chart. We had a tremendous number, okay, of weeks. And I'm all the way back here in 2017 because I've been tracking these expected moves, and every one of these that I'm showing you here in the SPX, these are actually drawn by hand. All right, I wanted to be a little bit of a perfectionist over here. There's a ton of expected moves though. Back in 2017, there were $22 for an entire week. So when people say, oh, volatility is totally dead, yeah, not as dead, okay, as it was back here in portions like, some of the summer of 2018, okay. Right now, again, we're not totally dead. We're still sitting on like a $33, $34 expected move, which is effectively, I've seen it a lot lower. I mean, come on, we've had, this is 30, 40% higher than some of the expected moves that we've actually seen in some summer trade in the last couple of years. So the fear of the Fed lasts a whopping 1 day. And as I was saying on the fear of the Fed and showing you a little bit about the Fed watch tool, okay, the bonds, okay, they're just, really almost ambiguous at best. They're not giving us anything decisive to want to bite onto. And I've mentioned this time and again, I refuse at this point to want to get short the bonds. I just don't think the bonds are going to sell off. I don't think interest rates are going up. I just don't think they're going to go up. And I actually am looking for the bonds to rally back up. And as those bonds rally back up, okay, I would have anticipated that the XLF would have taken a little bit of heat. But again, I'll reiterate, the XLF is right on the edge, on the top edge of the expected move, 2 weeks in a row. Okay, so if the XLF is really one of our biggest sectors, which it is, okay, and it rallies huge, then why is the SPX, okay, why is the SPX up only nominally on the week? There's an answer for that. It's right here. It's in the energy sector. So energy throughout the course of the week is been Mr. Toad's wild ride to the downside. Here again, I'm going to be pulling up the auto expected moves, and you can see in terms of the energy sector, it is outside of the expected move and continuing again to fall. We're going to watch this one very, very carefully because it's kind of a rare occurrence that, again, a marketplace in general, and we're looking at the S&Ps in general, when a marketplace is hitting all-time highs, well, you have to look at energy as still being a very key sector. Now, on a year-to-date basis, energy is still up just shy of 10%. But right now, we've got a major sector that does have kind of a leg, if you will, kicked out from under us. So what are we doing right now? We're just feeding highs off of nothing more, again, than financials, okay, and some of the monsters of tech. That could get us a long way. We have to keep an eye on energy, though, as oil actually cruised all the way down and back to the low 60s. In discussing oil, it's probably the opposite of what everybody would have anticipated, given the fact that the Iran waivers, okay, those are done with. So Iran is not going to be able to export nearly as much oil. You would think that the global, oil supply would tighten a little bit, and oil has done the exact opposite. Oil is actually sold off in a marketplace that we are supposedly getting a little bit tighter in there. All right, as I was also discussing, just a couple of minutes ago on the video portion of this, we're hitting a little bit of what we term some IPO fever. I mean, pick your IPO here. I'm just going to throw up one of them. I'm going to pull up Zoom, and the reason I'm pulling up Zoom is because it's exploded to the upside. If you look at the year-to-date percentage, it's up just shy of like 30%, but that doesn't necessarily do it justice. The reason is this kind of come out price, that was the first actual trade on the chart. Nevertheless, where they priced the IPO was substantially lower. I mean, you're looking at an underlying that, Zoom Communications, nobody expected much out of this thing. Absolutely on fire at this point in time. We could point out the same with Beyond Meat, which is... Again, there's too many jokes on that one. I'm just going to let it go at this point. Okay, expect Uber to be highly anticipated this week. The reason I'm really bringing this up, first of all, I'll bring up Zoom. Zoom doesn't even offer weekly options. The bid offer spreads are so wide you could drive a truck through here. The other reason I really wanted to bring this up, Lyft. Okay, a lot of you, including myself, we look at this and we're like, wow, all right, Lyft is finally out. I really want to get involved in this. Their first earnings announcements coming out. And I wanted to spend just a moment looking at the trade tab, looking at the options chain, okay, just to do this justice so everybody's on the same page. Listen, open up just the May options. I don't care which options you open up, all right? Pull up volume and open interest. Listen, there's some size starting to trade in here. No question about it, right? Place your bets, okay? The one thing, though, that really stands out to me, first of all, okay, most of the open interest and most of the volume is on the call side of the equation. It's on the calls, okay? Take a look at the puts. Very, very minimal. What that tells me, and again, there's one strike on puts that are actually trading. What that initially tells me, okay, this is retail only trade. Professionals are not going to trade in Lyft. Why? Okay, why aren't professionals involved in here? And the other thing you need to question is if professionals aren't involved, there has to be a reason. They seem to know something. I'm going to tell you exactly what they know. Markets, okay, are fickle this way. They know when not to trade. Look at the bid offer spread in here. They're 20 and 30 cent wide. Now, I know the market's closed right now, but during the trading day, 20, 30, maybe even 40 cents wide. Do you realize you could pull up a product like the SPX? Okay. Now, Lyft is like what? 60 some odd dollar stock, 50 some odd dollar stocks bouncing around a little bit. Here's the SPX. It's a $3,000 behemoth. $3,000 behemoth. And you can pull up options in here. And I'll even pull up really short-term stuff. The markets are like, 5, 10 cents wide. Think about that. Maybe 15 cents wide. Ooh, here's one that's 40 cents wide on a $3,000 product. Meanwhile, okay, we have all of these clientele here, and they're coming into TheoTrade and like, well, how come you're not trading Lyft? I'll tell you why I'm not trading Lyft. Because there is no reasonable way, okay, that mathematically long-term you make money in this marketplace. That's the one thing that people do not get about this business. And I don't want you to take this as being either dismissive, okay, or anything of the type. I want you to understand, okay, I worked in the brokerage side of the business for 15 years. Prior to that, the market making side of the business, specifically in the risk management side of the business, where we, okay, manage risk of portfolios upstairs. So we had all these market makers on the floor, okay, and we actually manage the risk and often manage bid offer spread. Market making firms are doing one thing in here. The market making firm, okay, is getting to keep everything in the middle. This is utopia for them. Okay, you have a $62 product with a 20 cent wide market, a bunch of retail clients that are going hog wild in it. You ain't got a shot. This is like showing up to a casino. And when you show up to the casino, you got to pay to get in the door for the casino. And the casino has an edge over you because you paid to get into the door of the casino. It doesn't make sense. And I'm going to say this again and again. It's actually one of the reasons I was bringing up this IPO fever a little bit, is to kind of set that up inside of Lyft. The same is going to be true in Uber. Like eventually these things will move to penny markets, right? You're like, but what? But what? I mean, you can even look at Amazon's markets. Amazon, right? It's a $2,000 behemoth. Okay, $2,000 behemoth, you start to open up its option chains, and even its option chains, yeah, there's some wider markets. Obviously, the market's closed, but it's a $2,000 product. It should have wider markets. Okay, they should be, 80 cents wide over here. I could go on all day about this, but having come from that background, there's nothing more frustrating than watching what I would term amateur hour inside of the marketplace. All right, speaking of a couple of the tech stocks over here, just a brief and quick glance at Apple. Okay, Apple ended up closing at 211.75. For those of you who remember the video earlier in this week, this is actually the exact butterfly that I placed. There's the butterfly I placed. I did it for 72 cents. Okay, now that butterfly, I closed it. There's my closing order right there. I actually closed it for $2.31. But the interesting irony, okay, and I like to play a little bit of the Friday afternoon quarterback here. But take a look where we closed. We closed. If you had left the butterfly on, okay, literally to expiration, you'd have made about $350. The reason I'm bringing this up is not an argument that the butterfly should have been left on. It's quite the opposite. The butterfly should have been closed. It was closed. Mine was actually closed on Wednesday. On Wednesday, I made $2.30. If you had held this thing, okay, through thick and thin, and Apple did all kinds of stuff throughout the course of the week, right? It was down big on Thursday, rallied back up. You still only made maybe another $1 off of it. It didn't pay to hold the fly. It did not pay to hold the fly. Now, finally, last but not least, okay, a little bit of a trade idea. And one of the trade ideas I want to provide you is in none other than Cisco. Why? Cisco's off everybody's radar screen right now. I have a duration, okay, position in here. When I say duration position, what am I saying? Okay, it means I'm going to be holding a position for in excess of 3 months. In excess of 3 months. I am buying a deep in the money put. This is absolutely unequivocally a bearish position. Imagine that, Don getting bearish, right? Why am I bearish in Cisco? Okay, today is a perfect example. You got tech flying, right? You got tech flying. What did you get out of Cisco? Absolutely nothing. Nothing. Okay, what does it look like in terms of a chart? Well, who cares? But the stock is starting to roll. Okay, so if you look at this, stock has started to roll over a little bit, possibly getting bid up. Earnings, though, in the near future. At this point in time, okay, we're going to look to Cisco, and we're going to say if the stock bids up a little bit throughout the course of this week, then and only then could you get into the duration position. You don't short into the hole. This is not the time to get into the duration position. The duration position, if the stock bids up a little bit, maybe any time before the earnings, it might then be, okay, a viable time, okay, to get into one of those effective short positions. I wanted to bring up Cisco, though, because in a marketplace where it kind of feels like, everything, if you're short right now, everything is just moving against you, okay? Is it really? We had energy this week where we closed a bearish spread in energy very, very profitably. We have Cisco, okay, that's effectively moving our direction, okay? We don't have any substantial position specifically in the XLF, but we do actually have a newer position inside of Citigroup, okay? And there's a bearish position that we established in Citigroup. The irony is the bearish position was established right up here. We're actually net slightly ahead on that one. So you have a marketplace, again, that is largely scared by the Fed, doesn't necessarily buy into any of the Fed speak, heads to the upside. Bonds are up, okay? Gold is up. You have almost every asset class trading to the upside, okay? Yet a few sectors, like, again, energy, kind of breaking down. A few, again, cracks showing up inside of the Nasdaq, and meanwhile, we're in IPO fever. This is going to set the stage, once again, for a pretty good trading week. Stay tuned. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.